Very good evening, everyone. Welcome to the webinar. We are going to discuss a few things on this webinar. One of the things is Option Tiger's new product, AdjustMAX. But I believe a lot of people are new here, and many people have come in from Udemy, the three-course bundle, and so you're probably fairly new to options as well. So I want to sort of give you a lay of the land because this is very important, especially if you're a new options trader. You want to be careful. Options are very powerful. We know that, but at the same time, they require a learning curve. I mean, you've got to be patient with options, and besides just the patience, there's also a couple of subtle details that you may or may not have figured out by now. So anyway, let's get started without any further ado. My name is Swaminathan. I'm the founder of OptionTiger.com. Option Tiger is in its third year now. However, as an options trader, I've been an options trader for about 8, 9 years now. I've mostly learned the whole game by myself. Of course, I've taken a few bought a few products, studied a few products, followed a couple of people, and things like that. But for the most part, all the real nitty gritty details I've had to do it on myself. And that's the thing with options. There's a lot to learn. And when you look at the real markets, how the stocks move, how the options move, every day it's a different market and different things are going on. And so there's a lot of learning that is, just by looking at the markets and doing some analysis on your own. And so that's primarily how I've become an options trader. And about 4 years ago, I decided to uh, put everything that I learned over the years into products and courses and all of that. And that's how Option Tiger got started. One of the things with all my products or courses, you'll see that I always look for the pitfalls because in the options trading game, these pitfalls can come and blindside you for the most part. And yes, you will learn something after you've made a mistake, and it's a good learning experience, but it can come at quite a bit of cost. So one of the things that I always say is, take your time with options, do paper money, and just because it's paper money, you shouldn't take it lightly. You should take it seriously, and then you'll have a very good appreciation for how options work. Anyway, that's as far as myself. I have a bachelor's degree from engineering in engineering from India, and I also have an MBA from Columbia Business School in New York. As I mentioned, Option Tiger started out with courses, and then over the years, I've developed a few proprietary methods, and these are what I call strategies that give every trader an edge. And these are things that I've developed myself because I found the need to develop these products and these systems. Because one of the things in options is you have to take a systematic approach to your trading. And as we know, there are several strategies available in options. There are spreads, straddles, calendars, condors, all kinds of stuff. But anytime you take one of these trades, it's always better to approach it with, from a systematic standpoint. So which means you know what you're going to do at specific points. It's just a matter of uh, finding out what those specific points are. So, which means when to pull the trigger, and that will come only with some experience. But those are the kinds of things that I show in these products. So I have a YouTube channel that also has about 400 free videos. And anytime if you subscribe to the channel, you'll get notified. Anytime I add a new video, you'll get notified there. I'm also a top 30 Udemy instructor in the financial markets, and I believe a lot of you have come from there. So welcome to everyone that came from the Udemy platform. So today, for the most part, what we are going to discuss, or at least discuss in more detail than the others, is the new product called AdjustMAX. If you've traded options for any length of time, you know that getting into an options trade is only 50% of the job. The other 50% is how you manage that options position. So this is a key difference between options and all other instruments in the market. You can compare options to stocks, to futures, to gold, to commodities, to any other asset class. And options are very unique. And so we need to take advantage of this uniqueness in options. And the uniqueness I'm talking about is the ability to adjust your position. With stocks, if you buy a stock, you want to see it go up. If it goes up, you make money. If it doesn't go up, if it goes down, you lose money. But if you think about it, what is it that you can do if it starts going down? What are your options? What are you going to do when this stock goes down and you're sitting on a stock that is going down in value and your account is going down in value? Similarly, you might short a stock as well, thinking that the stock will go up. But if the stock starts going up, what is it that you can do? There's really nothing you can do. You can either double down and reduce your cost basis a little bit. But once again, if it continues in the same direction, there's really nothing, there's no adjustment that you can do. And so options are very unique that way. It is the only instrument where you can actually adjust your position. So think of it like a chess game. You make a few moves, then you're getting attacked from, by the opponent from, some direction. You're able to then adjust your position to mitigate that attack, perhaps even attack yourself. That's the kind of game options is. Options is very similar to chess. It's a strategic game. It's a mathematical game, and you don't have to depend on picking the right direction of the stock. So it's all, you need to have a strategic approach, and that's the beauty of options. And so we're going to talk about AdjustMAX, which is Option Tiger's newest product. We'll also touch upon the Condor Max trading system for iron condors. For people who have traded for some time, you know that the iron condor is a phenomenal strategy. It's easily the most popular strategy amongst options traders. However, it does have a couple of pitfalls, and the Condor Max trading system actually tackles those pitfalls very well. Then we have the Income Max spreads and straddles. These are much more simpler systems. And in fact, if somebody is beginning, I would say that the Income Max systems are a good way to start. The day trade and the swing trade max systems are chart-based systems. So we'll take a brief look at that as well. Earnings Max is interesting because all stocks have earnings reports 4 times a year. And once again, if you compare options to stocks, with stocks, there's nothing you can do. You can take a gamble because, if the earnings report is good, if the stock does well, it's going to take a big jump. And if it doesn't, it's going to take a big dive. So it's a gamble. Whereas with options, you really have the ability to play a very mathematical game with earnings reports. And that's the beauty, once again, of options. And so the Earnings Max product actually gives you a complete playbook of how you should approach earnings trades. Then we have Weekly Max. Weekly Max is obviously maximizing the opportunities that weekly options provide. Weekly options, I consider weekly options as anything that expires in 7 to 15 days. And when these options are very close to expiry, their behavior, their dynamics change completely. And it gives rise to various exciting opportunities, but at the same time, it also gives rise to a different set of risks. And so we have to be aware of that. So the Weekly Max covers all of that in detail. And finally, of course, we are at the end of 2014. Believe it or not, the year has gone off really fast. And so I'll be talking about the year-end specials at Option Tiger, very good specials. So you can take advantage of. This is probably obviously going to be the best price of the year, so you can take advantage of that. And finally, of course, we'll spend as much time as needed on Q&A. So if you have any questions during the webinar, please feel free to type in your questions on the question box, because otherwise you might forget your question. Because what I'm going to do is I'm not going to stop the webinar for the questions, but I'll take all questions at the end. We'll go through every question. So please feel free to type it into the question box. All right, so let's get started. I know there's a lot of new people here, and perhaps you're new to options as well, because many of you have got the three-course bundle. So I want to just give you a dose of reality in terms of options. This is not meant to scare you. This is not, it's nothing like that. It is just the reality of the options market. There's the good news and the bad news. The good news is options are powerful. They are mathematical. You don't have to pick direction if you don't want to. They are cheap in the sense, if a $600 stock, you can control a $600 stock with $6 per share. So it's very inexpensive. The returns are leveraged. The returns are very powerful. If a stock makes a 5% move, your options position will probably make a 50% move. So everything is magnified, including your losses. But there are ways to limit your losses with options. So these are all the good things about the options. There is one thing that it may not be apparent to newcomers to the options market, and I want to make sure that you understand this, because this is a very key element of the options market. Oftentimes, if you're a newcomer, you'll be taking trades, whether it's paper money or real money. Hopefully, it's paper money. And you'll see that you're facing losses. You'll see that the positions are going against you. And one is, it may be going against you because you still haven't learned what the proper adjustments are. And that's fine. But we're not talking about that. Strictly speaking, from a statistical standpoint, if you think that you should win at least 50% of your trades, but you'll notice that, you don't win 50% of the trades. And so I want to make this aspect very clear, because it's not, sometimes newcomers to options don't realize this, and they don't realize that, the edge is not on our side. It's not on the trader side. The edge is on the market maker side. So what do I mean by that is there is a fundamental difference between the options market and the stock market. So stock markets have developed nicely online over the past 10, 15, 20 years. And in the stock market, there's obviously a lot more liquidity. So there are, 10 times more traders in the stock market than the options market. So that's, that we know already. So stock markets have evolved to a point where the intermediary, the platform, whether it's an E-Trade or a Fidelity or any other platform, they simply act as a matchmaker. So basically, there is a buyer, there is a seller, they just match it up, the platform matches it up, and that's why they're able to give you the service on a flat basis. So you can trade up to 5,000 shares for a flat price of $9.99 and things like that, because all they're doing is providing the role of a matchmaker. However, in the options market, it is different. In the options market, every one of our trades is not going against another trader, because anytime we buy, there has to be a seller, and anytime we sell, there has to be a buyer. However, our counterparty in the options market is not another trader. It is somebody called the market maker. So the market maker is on the opposite side of every one of our trades. And the way to understand the market maker business is you have to compare it to the casino business. So when we walk into a casino and we play any of the casino games, we are playing against the house. So the casino is the counterparty to all our games. So whether you play blackjack or roulette or whatever the case might be, in 99% of the cases, the casino acts as the house. So they are the market maker equivalent of the options market. So now if we think about it, why will the casino do this? Because they are taking risk, remember. So whenever both market makers and casinos, whenever they take the other side of our trade, they are actually taking risk. So why would they do this? They do this because legally they are allowed to have an edge. So mathematically or statistically, they are allowed to have an edge. And this is approved by the regulators. And so when they're allowed to have an edge, this edge, shows up in the long run, because they'll have a statistical edge. They say that in the casinos, the house has an edge of 52-48, so basically an edge of 2 points. I would argue that in the case of the options market, the market makers have even a larger edge than the casinos, because the market makers are getting an edge from a few different places. One is they're setting bid ask spreads, which by itself is an edge, and you can't get away from that. The second and more important aspect of the market maker is they have considerable flexibility in setting option prices based on volatility. So, as if you've studied the phenomenon of implied volatility, you know that it is a calculated variable. So, it is backed out. The implied volatility is actually backed out from the options price. And so when market makers see that there is a lot of demand for a call or a put, they will immediately increase the volatility. They will immediately increase the bid ask spread, and so they have and this flexibility is done automatically by their order management platform. So they have algorithms to automatically change the bid ask spreads, automatically change the volatility calculations. And so I would argue that they have a much larger edge. And you can think of one thing and know how much of an edge they have. When we take options trades, we believe we are taking a good trade. And we know that the only counterparty to our trades is going to be the market maker. And if we think our trade is good, then effectively that means that the market maker is taking a bad trade. And and you can imagine, they sit there all day and they take hundreds and thousands of trades, which by from our standards is deemed to be bad. However, at the end of the day, they still win. All these market makers win. There is the market maker business is one of the most profitable businesses there is. In fact, if you look at all the big banks, even the investment banks like Goldman Sachs and JP Morgan and Citigroup, if you look into the details of their yeah, of their quarterly earnings report, you will see that a vast majority of their profits are all coming from proprietary trading, what they call their proprietary desk. And basically, what that is that is a basically the market makers' profits that they're getting from trading. In fact, I believe JP Morgan last year or this year, one quarter, they made $100 million on every single day of that quarter, or something like that. Really ridiculous. But the point is, now this proprietary trading and the market maker business is becoming very big. And the issue is, we have traders, we have individual traders, especially in the options market. I know that many people trade without having the right kind of education. Traders then face transaction costs. It's not a flat fee when it comes to the options market. It is actually, you're going to have to pay on a per contract basis. Then we make mistakes, we get emotional, we panic. We're constantly in fishing mode. Oh, what should I do now? Things like that. And all of these issues really eat into the performance, and it plays directly into the hands of the market maker. So, net, bottom line, trial and error for traders is expensive. In the long run, the market makers have a serious statistical edge. And bear in mind one thing, these market makers are expert options traders. In fact, they are such an expert that they don't even have to see what is it that you're trading. They'll just look at the Greeks and that's it. They'll decide whether to take the trade or not. So they are absolutely experts. They have an edge that is allowed to them by the regulators. And so the bad news for us traders is we are starting, I mean, the table is not level. We are starting at a negative. When we enter the options market, the moment we enter the options market, we are starting with, we are starting at a negative, just like it's no different from entering the casino. The only difference is when you enter the casino, you're going there for some amount of entertainment. And so even if you lose some money, you really don't care, because you know you're going to lose money. But why is that? Why do we think that we are going to lose money? It's because the house has an edge. And but when we enter the options market, we don't come with that kind of a mindset. We don't come to the options market thinking that we are going to lose money. No, we are coming to the options market to make money. However, what we have to realize is that the tables are tilted towards the market makers, not by a whole lot, but it's tilted to a significant level, where if you trade the same trade 100 times, you will notice that the market maker will win most of the time. So we have to have a way to bring this edge back on our side. Okay, so that's now this is really where Option Tiger comes in, because Option Tiger systems and trading approaches and all of that, these are all have come up from years of getting frustrated with with the consistency problem. How can I bring this edge to my to our side? So I have spent 16 hours a day doing various kinds of analysis for over 4 or 5 years. I can tell you that, no pain, no gain, and that's very true. And so I've done that research already, and I've seen what are the approaches that work. Most importantly, how can we bring this edge back to our side? Because if you don't have a systematic way to bring this edge back to our or back to the trader's side, it's very difficult to have consistency in your trading day after day, week after week, month after month. So every system that you see on Option Trigger is designed to bring that edge back to our side. And I can tell you, proper adjustments, proper approach to adjustments are absolutely key to get this edge. There's no question about it. If you've traded options, you know that options, just getting into the options trade is only 50% of the job. The other 50% is how you manage that trade from that point onwards. So adjustments are key. I think we all know that, we all understand that. But the problem is, we don't even though we know adjustments are key, many times, because options are a little complex, there's no question about it, because it's a little complex, and we know that there's so many things that we can do, and we don't want to make a mistake, and so we get sort of frozen. Okay, what should I do? You see the position is going against you, but you still think, oh, what am I supposed to do now? How can I adjust this position? And let me tell you, this is very normal. Even 7 years ago, when I was in the same position, I used to be frozen. I couldn't believe. Okay, what are we supposed to do? And so it really makes sense to approach this in a systematic manner. What is the philosophy behind adjustments, and how do we approach adjustments? I think it should be clear that when you talk of adjustment to options, you have to take the step by step approach. So there's a 3-step process here. The first step is, you have to master adjustments for single options. So whether you have a long call or a long put, you should know what are the things that you can do to single options if the position is going in your favor, or if it's going against you. Because once you master the adjustment process for single options, then when you move to spreads, your thinking becomes more clearer. Because what is a spread? A spread is a combination of two options. And so when you have a single option first, you're most likely going to convert that into a spread of some sort. Whether it's a debit spread, credit spread, calendar spread, whatever it might be. But most adjustments for single options will result in a spread. And so when you actually then go to spreads, then the adjustment for a spread may involve a third option now. So how do we decide what that third option is? What are the characteristics of that adjustment? Things like that. We start thinking along those lines. So now you've gone into the second tier. And finally, when you know how to deal with three-legged option strategies, then you're now in a much better position to analyze and take the right kind of adjustments for the advanced strategy. So in advanced, we are talking about iron condors, calendars, butterflies, anything with three or four legs to it is an advanced strategy. But as you can see, it's a stepping, it's really a step-by-step process, and you have to approach it from the ground floor. And the ground floor is single options. So we'll talk about in this product, we're going to talk about how we approach options, how we approach the adjustments, and we'll go in this three-step manner. And adjustments are not just for losers. Adjustments apply equally for winners as well, because very often you'll see that the winner can be, can really make up for a lot of losers. In fact, in our trading room just a week ago, we did a trade on Chipotle. It was a big winner, 80, 90%, something like that. When you have a winner like that, then even if you have a couple of losing trades, it's okay, because losers are part of the game. What you want to do is maximize the opportunity from the winners and minimize what you're going to lose on the losers. And that's exactly what the entire AdjustMAX products is all about. You want to look at the Greeks. Greeks are always important in options. There's one Greek that is more important than the others. Obviously, we'll look at what that is. Then finally, there's also this concept called rolling. So whenever you have a trade and it's going against you, at one point, it makes sense to roll it. And it's only at that one point does it really make sense to roll it. So, when do you roll? When do you not roll? And how do you roll it? And then what do you roll it to? This is the kind of analysis that is very helpful when you're dealing with spreads or the advanced strategies, because rolling sometimes becomes necessary there. And so you want to know exactly what are the parameters to look for. When do when can you sense that a roll is required? Things like that. So what you get with this, with the AdjustMAX product, is a complete systematic approach to adjustments. How to look for the simplest adjustment for a situation. So for any given situation, for any given options trade, there is always going to be one adjustment that is going to be the most simplest for that situation. Or let's just say that that one adjustment is the most optimal adjustment for that situation. So how do you look for that? Which Greeks do you look at? What is the most important Greek to consider? How do you compare two or three adjustment possibilities and pick the best one? See, these are things that, once you take this analytical approach, then regardless of what the position is, you'll be able to quickly spend, and we're not going to spend too much time. You just spend about 5 minutes, 10 minutes, and you can even do this before market hours or outside of market hours, because you can do your analysis outside of market hours, so that once the market starts and you have the need to adjust, then all you're doing is just pulling the trigger. You're not thinking at that point what to do. Now, granted, after market opens, sometimes markets go crazy, and obviously at that time, what you thought would have been the right adjustment before the markets open may not be the right adjustment after all, and you'll have to change your approach, and that's part of the market process. However, on most days, you should be able to do your homework outside of market hours and be ready with your adjustment tactic. And then now, how do you use risk graph analysis? I get so many questions on this. When you want to simulate an adjustment, you're obviously taking your position from from A over to B. So how do you simulate B? And people don't understand. People don't quite understand how to look at your simulated position after you perhaps do your adjustment. So these are things that you'll need to get good at, and that's exactly what is covered. Where and how to set adjustment points mentally within yourself. You want to set some mental points, so that you're not wondering, okay, what should I do, when should I do it? The only thing you're thinking of is, okay, if it hits some point, you're going to do it and you're going to pull the trigger. So that's basically what it is. You want to learn adjustments so that you're maximizing your winners, and you want to manage your losers. And when I say manage your losers, having a couple of losing trades is part of the game. You cannot avoid it. But what can you do to the losers? Okay, one is you can first of all try to minimize your losses. If at all you're going to lose, you're going to minimize your losses. Second thing you can do is, if you can, come back to break even on that position, even if it takes a couple of days, 3 days, 5 days, 7 days, whatever. It's better to come back to break even and then exit the position. The Obviously the best thing would be is if you're somehow able to turn a big loser into a small winner. Obviously that would be the best, but not every position can be done that way. But so if you can bring it to at least break even or minimize your loss, and that's good. But the key is you want to adjust to maximize your winners. So that's what the product will talk. In fact, the product, I'm actually right now recording the product with all the live trades, and I can tell you, if you've seen the market in the last couple of weeks, we had, this week we had some big up days, but the week before that, with oil going down and all that stuff, the markets went down quite a bit, and so we had a 5% move down and a 5% move up in the indices. And so, it's been a crazy market for, when I'm doing this recording, and you'll see that all on the trades. One trade will probably get into trouble tomorrow on Monday, so we'll be doing some adjustment. So all these things, all these tactics, these analysis is being recorded right now. So if you do get the product, you will have access to half of the product today only, because I'm going to continue recording these trades for another week or 10 days. So I'll be putting those up, but you do have access to the first half of the product today itself. So the good thing about adjustments is, the most important thing I'll tell you is this whole emotional panic situation, because many times, if we don't know what to do, we panic and we absolutely will do the wrong thing. I can tell you that, including myself. I've done that so many times in my early days when I was doing it, when I was trading options. Is when you get into a panic mode, then you're probably, very high probability, that you're going to do the wrong thing. So we want to avoid those panic situations, and that's why it's important to create mental adjustment points and sort of do those things in somewhat of a robotic manner, robotic but analytical. It's very important to be to behave like a robot, but also based on some good analysis. All right, so that's what this product is all about. There are 5 live trades inside the product. The first one is a long call, the second one is a long put, then we have a credit spread, a debit spread, and then a calendar. And one of these trades is going to be converted into an iron condor, and so you'll see that part of the adjustment as well. I have purposely not exited a trade. In many of these trades, there's very decent profit, $1,000, $2,000 profit, but I'm not exited, because I also want to show how you can maximize your winners. What are the tactics you can use to maximize the winners? Not every tactic will work all the time, but at least once you know what your options are, then you're better prepared to make the decision. And if you make a decision, you have to stand by your decision. And so the whole point is to open your mind about all the different possibilities that there are within these positions. So that's as far as the AdjustMAX product is concerned. If you're somewhat in the advanced level, or at least if you're in the intermediate level, the Condor Max is a very elite intellectual property that tackles iron condors. As I said before, iron condors are one of the most popular options trading strategies, and the Condor Max system actually tackles all the negatives of an iron condor. So if you look at the negatives of an iron condor, it cannot handle a huge move in either direction. It cannot handle a flash crash very well, and it also has a double negative gamma. So as the position is going against you, it is deteriorating faster and faster. So it's actually deteriorating exponentially. And so that is a pretty bad negative of an iron condor. However, with the Condor Max system, I can tell you that every iron condor that you put will be protected from all of these negatives. And in fact, what I want to show you is this was just not last month, in October. This customer Ben bought the Condor Max, and in October, if you recall, the markets were down 10% and came up 12%. So again, once more, a very volatile month. But you can see that he says that all of the adjustments you showed in the course made him an amazing profit. Without those adjustments, the Iron Condor would have been a disaster. But most importantly, he says, now I know how to react to whatever the market throws at me. That is very important because you want to get that confidence of being able to handle without panicking, being able to handle any kind of adverse market situation. That is the key because that is where most people tend to panic, make mistakes, and do all of that. So you shouldn't get afraid. You shouldn't get afraid of that kind of a situation. And obviously that comes with practice, but that also comes with some good analytical approaches to options. And so that's exactly what these provide. The income max strategies are much more simpler. So if you're more at the beginner level, the income max strategies will be very helpful. It applies to debit spreads and credit spreads. It also applies to straddles and strangles. And if you know that a stock is trending, you apply the spread system. And if it's volatile, you apply the straddle system. Once again, there is key intellectual property for income generation. There is key intellectual property for risk management, and there are 2 or 3 standard adjustment techniques for each of them. All these products you see, all these systems, is you will have these 3 components to it. One is the ability to generate an income from that trade. 2 is what happens if it goes against you, so which means you want to manage your risk properly. And 3 is how do you manage your risk properly? And so you will always have a few different techniques that go with all of these systems. So that's the income max. Then we also have chart-based systems. So these are technical pattern-based systems. The day trade max. The day trade max is an intraday trading system. The swing trade max applies for trades that are 1 to 4 weeks. Sometimes the trades go in our favor. We'll close it off quickly, but most of the time it will be for a week or 2. I have someone saying that there is no sound. Can someone please tell me if there's no sound, or is it a problem with that person's computer, perhaps? If you can, yeah, okay, sound is okay. Venkat, sound seems to be okay for everyone. Please check your own speaker or your headset, whatever you're using there. Okay, great. Thanks, guys. All right. So, with these chart-based systems, the good thing is, we do make some decent, very good returns. Every now and then we'll make 60%, 80%, perhaps even 100%. The key is we use highly customized indicators. We rely on some powerful signals, and these provide high probability trades. It doesn't mean that every trade is going to be a winner. No, of course not. The goal is we try to get 7 to 8 winners out of 10, and on the winners, we want to make a good percentage, 60%, 80%, 100%. If we can do that, then if we lose 20% or 30% on the losers, it's okay, because first of all, we are going to try to manage 7 to 8 winners. So the day trade max, swing trade max systems, besides the systems itself, we also have trading rooms for these things. And you can see somewhere here, this was the one I was talking about a couple of weeks ago. Chipotle is up, 80%, 90% on this. Here's another 50%. So you'll see that these kind of trades, there are some very good trades in the trading room. There's a trading room for day trade max as well as swing trade max. Both are monthly subscriptions. You don't need to have the product itself, but I would say that it helps if you do, because then you know why we are taking the trades, why we are suggesting some of these adjustments that we do, and all of that. But if you want to just do the room and not get the product, that's fine also. Then we at Option Tiger, we also have Earnings Max, and Earnings Max is again a very interesting product because you have some phenomenal earnings trades opportunities 4 times a year. And so the Earnings Max products covers typically 4 types of trades, but actually 6 different trading strategies that are most suited for the earnings season. And these apply before the earnings report date, during, so which means during means we would keep the trade through the earnings report, and then after the earnings report, a different set of trades will be applicable. So this product covers all of that in detail. And of course, when you talk of earnings, the unique thing with options is we know that the implied volatility of that series, which is most impacted by the earnings report, the implied volatility is going to skyrocket before the earnings event. So implied volatility is skyrocketing, which means option prices are increasing. However, given that that is the earnings, that is the series that is being impacted by the earnings report, you're obviously going to be very close to expiry, and therefore time decay is eroding the value of those options. So you have two opposing forces that are working on the option prices at this time. And so a detailed study, a detailed analysis of this interplay between implied volatility and time decay becomes very critical. And so we obviously explain that entire dynamic in detail in this product. But it's actually very exciting product, the AdjustMAX. If you do take earnings trades, I would say this would be very helpful to take, again, a systematic approach. Then finally, we have weekly max. Now, weekly options have become very popular in the last 2 years. In fact, the volume in weeklies are probably now about 40% of all the volume in all the major stocks and indices. Indices for sure, it's becoming very large. And so once again, you have a different set of dynamics when we are talking about the final 7 days, the final 15 days. There is a balance between the Greeks that you have to strike between delta and theta. Time decay strategies are excellent, but how do you approach these time decay strategies? What is the, how will you create the edge for yourself? So that's the key, is how do you create the edge? And so the weekly max covers a lot of those concepts that will create a significant edge and give you the approach to take any of these trades. Of course, we have Option Tiger courseware. This is, from beginner, intermediate, and advanced levels. There are 47 courses. They're all logically structured. It can take anybody from even if you know nothing about the financial markets, you can start from the beginner and move to very advanced levels. The difference is the courseware is just courses. It doesn't have any intellectual property. All the other Max systems are a very specific way to approach those systems, whether it's a spread or a straddle or an iron condor, whatever. It is a specific way to approach it, and it's being tested. It's it works. You just have to do more and more of it. The more you do it, the better you'll become, and you can consistently produce winners almost on any given trade. At the very least, you can cut it out at break even. At break even, you come out, you say, okay, this is not a good trade. Let me just get out of it. I don't want to get burnt, and let's just move over to the next trade. So at the very least, you'll have an opportunity to do that. So, but these are courseware. So, you can get the beginner, intermediate, advanced. Each of them have about 13, 14 courses to it. And it's very important. And I'll tell you, so many people, they skimp on this education. They just take some trades and they lose. I can tell you how many emails I get on a weekly basis from people who have just lost 3,000, 5,000 on one single trade. But then you ask them, hey, but do you know how this works on an iron condor? They don't. And just because somebody has told them, oh, you should trade an iron condor, they do. So please don't. I mean, that is the biggest mistake I see. People skimp on the education. Options are not like stock. Options require, they have power. It's very powerful, but it has a learning curve. So you must be patient. You must be diligent in terms of your learning process before you start tackling any of these big strategies. So finally, what you get with any product from Option Tiger is, first of all, you're going to get superior options knowledge. And in all my products, I teach you how to fish. I don't feed you fish. My goal is not to feed you fish. My goal is to teach you to fish. So everything that I know, everything that I've learned over the last 8 or 9 years has all gone into these products. All of these tactics that you see in any of these systems can be used for any of your trades. So, that's the goal. That's the goal. You want to get to a point like today when I do my personal trades, I don't look at, if let's say I started out with a debit spread. If I start out with a debit spread, but the markets are going to change, the stock is going to move, and it goes. And that debit spread, by the time I exit that debit spread, it may not even be a spread anymore because I've adjusted it once, made it something else, adjusted it second time, made it something else. And as long as you are, adjusting your position for the way the markets are moving, your final position and your original position may not look like anything at all. And that's the way my positions go right now. And that's the way you want to be, because regardless of whether you start with a spread or a condor or a calendar, you want to get the adjustment approach. Once you get that, then any position you will always find the right way to deal with that position. So that's really what we're talking about. You want to get to that kind of an expertise level where you start off with something and it ends up somewhere else. But the important thing is you should at least make a profit. You should at least make some money out of it. And if the trade was going against you in a big way, then you want to minimize your losses or try to come to break even at least. So that's what you're going to learn in all of this. Most importantly, all of these systems will provide the right framework for you to have consistent performance for both the short and the long term. So that's really all I had. So what we're going to do now is we're going to look at Q&A, because this is the time to ask questions. Please go ahead and type in your questions. I'm just going to take a quick water break and I'll be back in about a minute or so. Okay, folks, let me make sure I don't miss out any of the questions. So let's see. Okay. Would you define market maker more clearly? All right. So I'm going to type in a Y so everybody can see the question. Would you please define market maker more clearly? Is it the brokerage firm that you're trading through? No, it's not the brokerage firm that you're trading through. Your brokerage firm is only a in between. Is a what to say? It's a middleman. It's a platform. I've heard the term many times, but it seems so nebulous. Think of, I gave you the example of the casino, right? So think of what the casino equivalent might be on the market maker side. So your brokerage, if you're using Thinkorswim, for example, Thinkorswim is just a brokerage platform. On the other side of Thinkorswim, now the way market makers work is, there are market makers for specific stocks and indices and all of that. So one company might be a market maker for the S&P index, the SPX. Another company might be a market maker for Apple. Another company might be a market maker for Google. One company can be a market maker for Apple, Google, Priceline, Netflix. So there can be multiple market makers for the same for the same instrument. And the more market makers there are, the better bid ask you'll get, because those people are competing against each other. So if you've noticed, Apple options are very competitive, especially now that these prices, Apple's split and come down to the $100 level. You'll see that many times Apple at the money or slightly out of the money options trade on a 1 cent bid ask spread. It cannot get any better than that, and that's because there are many market makers who are competing for your trade and for your for your business. So the market maker, when you buy an option, the market maker is selling you that option. When you sell an option, the market maker is buying that option. We are not dealing with other traders. So in a stock trading platform like E-Trade or Fidelity, when you buy 100 shares of Apple, there is no market maker. You're probably buying it from someone who's selling from another trader who's selling it. So it's a peer-to-peer platform. Whereas in the options market, it is not peer-to-peer. It is like a casino model where you go into the casino, you play blackjack, and you're playing against the house. So the market maker is the house. Hopefully that's clear now. How can the retail trader win, Robert? That's exactly what we covered in this webinar. It's not easy. I can tell you that it takes a lot of work. It takes a lot of analysis. It takes some persistence, and you have to find a way to bring that edge back to you. Okay, you have to find a way to bring that edge back to you. And so that's what all of this webinar and all of this was all about. Anyway, so what's the adjustment for call debit spread? Well, I mean, it's all covered in. If you want to know the basics about a call debit spread or put debit spread, I would look at the intermediate module. Obviously, this it's outside the scope of this webinar to see what the adjustment. I mean, it will all depend on the situation, what strike prices you have, what's the expiry, and all of that. But basically, if you're looking at spreads, you would look at the intermediate module. There's, I believe, about 13 courses there. I think that can really bring your skill level up as far as spreads are concerned, both debit spreads as well as credit spreads. All right, Pavel. Hey, Pavel, how are you? From my experience, you cannot do correct. Let me see here. Let me type in this question here. Okay. From my experience, you cannot do correct analysis in out of the market hours with what if function in TWS with interactive brokers, especially not when dealing with weekly options, missing Greeks, spreads change after market close, and so on. Absolutely, I agree with you. That is one of the negatives of the interactive brokers. The moment the markets close, their platform goes into some kind of a deep freeze, and really nothing is real. I mean, nothing is alive from that point onwards. Yeah, that is a problem with interactive brokers. Pavel, you're absolutely right about that. All right, let's see. What is the best way to scan for trades? So scanning is a function by itself, Val. Oh, hi, Val. How are you? The scan. If you use Think or Swim, Val, you should be able to see the scan function. Now, in fact, I was going to create a free course on scanning, and thanks for reminding me. Hopefully, over the next few days, I can create this course. I want to show how you can do a basic scan for the kind of stock that you're looking for. And so watch out for that free course. I'll be doing that free course sometime in the next week or two. All right. Hey, Joe, how are you? Okay. All right. Yeah, no problem. I'll send you an email. Sure. Okay. Would there be some of all the other systems? Okay, sure. Pavel, I'll send you an email also. Randall says, Randall, I don't mean to be suspicious. Excuse me. I don't mean to be suspicious, but there's a lot of options training sold on the internet at various price points from Instagram who claim to be an expert. What separates Option Tiger from the competition? I'm surprised you, Randall, you've got all my stuff, I believe, right? You're actually, if I'm not mistaken, you've got the courseware and some other stuff. Yeah, you do. Yeah, exactly. So, just curious. See, I try to be honest with what I show you in these courses or products. Like I said, options have a lot of moving parts to it, and so you can never, in stocks, if it's anything algorithmic, then you can say, yes, okay, this is how it is going to happen. Whereas with options, you can't, because there are too many moving parts. There's time decay, there's implied volatility, delta and gamma are going in, are also very dynamic. So, and depending on the market, the volatility, can be changed by the market makers. So a lot of moving parts there. So when it comes to options, an algorithmic system cannot work. So all we can do is to show approaches, tactics, techniques. Okay, if this happens, what are the things that you can do? If this happens, what are the things that you can do? So that's so I approach the options education from that aspect. And it's not a black box system. None of these are black box systems. You have to adapt it. You have to apply your own judgment as to when you want to do this. And but that goes for even for a stock trading systems, I suppose. But with stocks and futures, you can create algorithmic systems, whereas with options, that's much more difficult because of all the moving parts. But so I try to take an approach where I show you everything there is, and you can then decide what the best course of action is for yourself. So that's basically my approach. All right, Joe. Yep, I will do that. What is the difference between your Udemy and this? Well, okay, very good question. So on Udemy is a different format, Robert. I've condensed many courses there. So if you bought the option tiger 3 course bundle, the beginners bundle there, everything is reduced into that one bundle. The equivalent on option tiger would be your the options beginner bundle. Okay, so here, but everything is separated into a course of its own, whereas in Udemy, I've had to combine many courses there. That's why you'll see the Udemy prices are higher, but the Udemy prices are also higher because of another reason, which is Udemy takes about 50-60% of the sale from there. So I have to price it higher, unfortunately. Where you'll see the big difference between Udemy and Option Tiger is a lot of these extra courses are there in the intermediate and the advanced modules, which are not there on Udemy. So you can send me a question. You can send me an email if you're interested. I'll give you more details, on that, Robert. All right. Okay. Yep. Randall says I already own. Yeah. Okay. So if you already own all the courses on Udemy, Randall, then once again, same thing applies to you. You're probably missing about, I would say, about 10 to maybe 15 courses. So, for example, if you look at the bundles, this macroeconomics bundle, I do not have on Udemy at all. So, the macroeconomics bundle is, where are the courses? Yeah, 4 course bundle. It includes introduction to financial markets. It includes the global money machine. Then it includes U.S. stocks, indices, things like that, and the U.S. bond market also. So, for example, that I don't include on Udemy. Then I also have in the, I believe in the intermediate, I'll have a whole bunch of, not in the intermediate, I'm sorry, in the advanced, I have some courses that are not included in, yeah. So for example, guerrilla tactics, advanced iron condors, advanced hedging with futures trading, things like that, price line earnings explosion, advanced credit spreads. I don't have that kind of stuff on Udemy. So if you're interested in some of these courses that are not there on Udemy, I would say just send me an email and I can guide you properly on that. All right. All right. Okay. Then Robert says, type in, I guess. When I look at an underlying instrument and determine why I'm getting into the trade and when to get out, isn't doing adjustments hanging on to a position that has not gone according to plan, so I should get out? No, I don't think so. That is, you would take that approach if you were trading stocks. Yeah, I can completely understand if you were trading stocks. Bear in mind, adjustment is not just for losers. Adjustment is for winners also. In fact, in this adjustment, in the AdjustMAX course, you're going to see 2 trades. They're winners, and I could have closed it out. They both generated a couple of $1,000 profit in 2 or 3 days. I could have closed them out, but by adjusting the winners, you're giving yourself the ability to milk the winners. Okay. Now, not every time will you be able to milk it in excellent ways, but in many times you're going to do better than your original profit. So, first of all, so when we talk of adjustments, we are not just talking about losers. Secondly, see, if you want to take a trade and if you think that your original premise was not there and you're going to close it, then why would you trade options? You would trade stocks, right? You can trade the stock itself because, you buy the stock. If it starts going down, you sell it. Or you short the stock, and if it starts going up, you sell it. If it doesn't, fine. You milk the winner. So this is a typical stock trading approach that you're trying to, you're trying to introduce into options, which means you're not taking advantage of the inherent capabilities of options. So if you wanted to do that with stocks, I would say perfectly go ahead, but not with options because you have to think about why they are called options, right? They are called options because you always have options. You For anything you do, you always have options. You always have 100 different ways of tackling that situation. So that's and you should take advantage of that. What is the product? Is it a software series of rules, broker specific? No, it's an approach. It's a method. It's a method of trading. If you trade debit spreads, then you can just trade debit spreads just by itself without having any kind of systematic approach. Or you can say, I will take this approach, which is captured in my income max spread system, and I will trade debit spreads this way because it tells me when I should get into a debit spread, what are the things I need to watch for if I did this, and what is your entry strategy. First of all, how do you enter the debit spread? How do you structure the trade so that it sort of brings the edge back to our side? If everything goes in our favor, these are the couple of things that you can do. If everything doesn't go in our favor, these are the couple of things you can do. So that's a systematic approach. So that's what you're going to see in a product. Whereas the courses are just plain education. Okay, what is a debit spread? Why do we need, what are the advantages of a debit spread? What are the disadvantages of a debit spread? What are the things to watch out for in a debit spread? So that's education. That's the courseware. Whereas the product is much more detailed approach. It's got some intellectual property, especially the Condor Max, and some of these systems are very sophisticated intellectual property, I might add. All right, Satish. So Satish, I'll send you an email on that. No problem. What's the adjustment for call debit spread? Yeah, Robert, I think I answered this. I think it is all covered in the what do you call the intermediate module, and you'll find a list there. Um, Robert Robert Hibble says, if you sign up for a subscription, do you provide a list of trades that demonstrates how the trades are made, and if so, can we learn from our own trades? No, you'll if you sign up for the subscription, you'll be part of the chat room, Robert, and the chat room will be where we discuss the trade or any other what are the stocks are doing, and we take the trade. Um, like I said, the chat rooms are generally used by people who already have bought the day trade or the swing trade systems, so that you know what are the indicators we are looking for, you know what are the signals we are looking for, and you'll also know the kind of adjustments that we make, why do we make them, and all of that. So in the chat room, there's no education because all the people already have the product. They know exactly why we are doing what we are doing. So, and you will too. If you get the product, you will too. But otherwise, the chat room is just a plain alert system because it's right during the market hours. During the market hours, really, there's no time for education or on the chat room itself. There's no time for that. Yes, two for one on the $29 courses also. Yes, yeah. You might be better off with a module. I guess there's two Roberts here. Robert Hayes. You might be better off with a module because the module is already 30% off, and then with this 50% further, 2 for 1, you're really getting a good deal there. All right. Let's see. Based on Robert Hevel, and hope I'm pronouncing your last name correctly. Based on some of the Udemy courses, it looks like your chosen platform is TOS. I have that, and also TradeStation and Interactive Brokers. TOS is the best, but not necessarily where we have a core platform or funded accounts. Where I have a core platform or funded accounts. Yeah, TOS is a bit more expensive in terms of the commissions. Interactive Brokers is very good with commissions, but not great on analysis, whereas TOS is just phenomenal when it comes to analysis. TradeStation, I'll be curious to know what your feedback is on TradeStation because I've heard some good things about TradeStation, especially when it comes to their option station platform. So I would be curious to know what you think on that. So anyway, that is as far as that. Yeah. So my approach is to use options as a proxy for the underlying. Example, intermarket pairs trade options are my execution. Many traders trade options for the behavior of the option itself. Any comments on the difference? I don't know. I'm not sure I fully understand what your intermarket pairs trade itself is. Many traders trade options for the behavior of the option, your execution vehicle. Right. My approach is to use options as a proxy for the underlying intermarket pairs trade. So let's say you're doing a pairs trade against the SPX and the Russell, for example. Options are your execution vehicle. Okay, fine. Many traders trade options for the behavior of the options itself. Any comment on the difference? I would say it's not a bad way. So if your trading strategy is basically an intermarket or any kind of a pairs trade strategy, and you're using options as your execution vehicle, that's fine. There's nothing wrong with that. You would still need to understand the how options behave, because if these pair trades last for a long time, meaning even a couple of weeks, the dynamics of options behavior starts to change, and so you will need to understand what these dynamics are. But other than that, yeah, if you have an intermarket pairs trade, you can use perhaps futures to do it. You can use options to do it. Yeah, that's perfectly fine. There's nothing. I would be perfectly fine with using any of these for that. Options, you have the leverage, obviously. So it's a better way to generate profit from the same amount of capital that you deploy. So yeah, why not? Sure. Tanu says, will you be able to send the slides by email? Thanks. I'm going to have a recording, Tanu. This is being recorded, so I will be sending out the recording itself. And perhaps what I'll do is I'll attach the I'll attach the slides also. Yep, that's fine. How can options be back tested? Is it only a manual? No, of course not. You can do back testing, a couple of methods, Robert. You can go, in fact, if you go to my free courses here. Okay, first of all, folks, if you're new to Option Tiger, please take advantage of this. There is a bunch of free courses here, various technical aspects, some options basics, and here you can see using Think Back and On Demand. This is the free course you're looking for, Robert, in terms of how to back test, and this is a free course, so you can enroll in this. You can backtest your trading strategies, learn where things went wrong, and all of that. So this is, I believe, about it. All these free mini courses are about anywhere from 8 minutes to about 15 minutes long, but they take one particular topic and it drills deep into that. So you can find those there. Okay. Macroeconomics bundle is a great one. did you already get it, Pavel? I think you did, right? Yeah. So okay, you like it. Very good. Very good. Yeah. All right, Sunil, you answered it. Got it. We'll send you an email. The proprietary systems are the all the Max systems that we're talking about, Robert. All of the Maxes are all proprietary systems. Are there any live trades in the intermediate? Yes, there is. Yeah. I'm new. Is AdjustMAX too advanced? No, AdjustMAX is not advanced at all. Like I said, we start with the tier one, which is tier one is your adjusting single options. See, because you have to start there. If you don't start from adjusting single options, it's difficult to go beyond that. Then everything else ahead of that is going to seem very complicated. But if you take a structured approach, then then you can go on to that. All right. So yeah, you will find some live trades in the intermediate bundle. Yes, definitely credit spreads, debit spreads. In fact, I can show you right now the if you look at the intermediate, what are the trades here? Yeah, bull call, bear put, bear call, and bull call. These are all trades on any given stock. So if you take bull call for example, the bull call is here IBM. We put a real bull call spread on IBM, and we analyze, simulate, and manage any adjustments if there is with in this course. So yeah, I mean you'll definitely find that both in intermediate as well as advanced. So if you're looking for a two for one deal, you can get the intermediate and the advanced Carol. All right. What happened to Condor Max? That's no longer active, Sunil. That was before I had all the what do you call the day trade max and swing trade max and things like that. The Condor Max monthly trade. The problem is many people because because the trades are not closed out. It's a trade that is going on for a month. If somebody misses an adjustment, then it becomes harder to sort of bring them back into the same cycle. Whereas with these, the day trade and the swing trade, if you miss a trade, okay, fine, you'll catch the next one. That's it. So it's much more simpler. All right. Pavel says, when I get the DT Max, ST Max, can I set the start date, for example, to March? Unfortunately, I don't have an ability to do that, Pavel, because it is the way that product is structured. It's a recurring subscription, so the platform automatically starts billing you when you start. So send me an email. Let's see what how we can deal with that. All right. 50% discount will be applied. No, it won't be applied automatically. It's not a 50% discount. It's a 2 for 1. So basically, you'll be buying it at the cost price, Michael. But as soon as you buy something, you send me an email, info@optiontiger.com, and let me know what is your free product that you want for your purchase. And if your request comes in by like 9:30 at night Eastern time, it's fine. I'll be able to answer it right there. But I mean, I'll be able to send it to you that day itself. Otherwise it'll just be the next morning. That's all. But send me an email with whatever you want in terms of your free product. So it's not a 50% discount, but it's a 2 for 1. The $29 adjustment for the strategy, yeah, wherever we have live trades, Robert, it will have adjustments, but the course is not meant to be an adjustment course. So remember that, bear that in mind. So for the real adjustment course, what we discussed today, AdjustMAX, that's your real deal there. Zun says, how to adjust options by using Delta. Not sure where you got in, where your options knowledge is, Zun. You want to send me an email? I'll be glad to, expand further. But it seems to me from your question that that you need some options education first. I would urge you to look at that education first, because I have seen in my experience, people are completely penny wise and pound foolish. They lose thousands of dollars, but they won't spend a couple of $100 on some education, which is very important. And I would urge you not to make that mistake. Okay, we want to sell covered calls, but want to purchase a long call leaps to substitute for the stock. Do you know of a good course for this? It's a good idea, Scott. I have been thinking of a covered call course also, using at sometimes using leaps and to substitute for the stock. I don't know of a good course myself, but I think this is something that I wanted to develop myself. So if you have any specific questions, feel free to email me, and I will answer that for you. Even without the course, but over the next couple of months or 3 months, I probably will create a course on this. All right. Yes, definitely. Randall is absolutely right. It's worth mentioning that TD Ameritrade and TOS will negotiate somewhat lower commissions based on account size, activity level, and also if you can tell them, hey, I want to, I'm coming from Trade King, for example, and I want you to match what they have, then they will match where you're coming from. Okay, so that's a very good point. All these people, they will negotiate. All these brokers will negotiate. So make sure you make sure you take the effort to negotiate a little bit. I mean, they're not going to negotiate very heavily, but they will negotiate somewhat. All right. Yep. Sure, Michael. No problem. Robert, I tend to gravitate towards speculative directional. Mostly every article training I see is credit spreads, not debit spreads. Am I on the wrong thought process? I'm missing how to use credit spreads. No, I would say you're absolutely right, Robert. I prefer the debit spreads. I prefer the long options myself. I prefer the debit trades in general. Because if you're going to take a directional trade, I would prefer that. Many times you don't want to take a directional trade. In that case, a credit spread is better. But if you do know that you want to take a directional trade, I would definitely say a debit trade is better. So, so you're not wrong. You're not wrong for sure. You're definitely on the right track. But depends whether you want to take a directional trade or a non-directional trade. All right, Jonathan. Hey, Jonathan, I already have your course and condo, day trade max, straddle and strangle. All your course included adjustment. Is it the same with? Yeah. So no, the AdjustMAX is more of a generic adjustment, course. So yeah, as part of your Condor Max and straddle strangle and everything, yes, Jonathan, you have things that are specific to those strategies, right? But let's say, like Robert just said, okay, tomorrow you just take a long call. You want to know how to maximize the opportunities from that. Day after, you might have a butterfly. You might have the point of AdjustMAX is, like I said earlier in my presentation, is to be able to get you to a point where your starting position and your ending position might be vastly different from each other, and that's not and that's not unusual at all. Like I said, I start with a long call. I convert that sometimes into a debit spread. Sometimes then the debit spread will get converted to a credit spread or a calendar. So all these things can happen, and at each time you're obviously all you're doing is enhancing the position and maximizing your opportunity. So that's the AdjustMAX product is basically designed for things like that. But you will see some commonalities between, like say the Income Max and the AdjustMAX. There might be some common elements for sure, but otherwise, this is a more generic approach towards the philosophy of adjustment. All right. Can you confirm the email address? Yeah, sure. It's right here, info@optiontiger.com. You can send it to info@optiontiger.com or hurry@optiontiger.com, any of those. That would work. All right. Okay. Yep. Sounds good. Scott, that would be worth. Yeah, I know. It's a Because covered calls are one of the, I would say one of the best strategies available in the options world. And it's a conservative strategy, but it's a very high performing strategy. So it's definitely worth the course. Yeah, I agree. All right, folks, that was a set of very good questions. Hopefully, we've answered all your questions. If you have any further questions, please do send me an email, info@optiontiger.com. Great, thanks for listening, and hope you all wish you all, you and your families, a very happy holidays, happy New Year, and all of that. We hope to speak to you soon, and take care now. Bye bye.